Is this the end? Is the stock market done for? Are the bears going to finally get what they want? The ultimate market crash? Is the SPY going down to zero? Look at that heat map there. That looks absolutely awful. All I see is a bunch of red on my screen. Another bloody day within the markets. When we look at the major indexes of the S&P and the NASDAQ, both look like straight falling knives. And so did so many different stocks within the markets, and investors right now are feeling extreme fear. Is this it? Are we done for? I thought the end of the government shutdown was supposed to make things better. Why are the bears roaring louder than ever? What's going on, everybody? I'm your host, Trevor, with Green Money Momentum, where we talk about market movements, making money, and money momentum. And I am more bullish than ever. If you are feeling a lot of fear, uncertainty, and doubt within the markets right now, I would just take a deep breath, calm down, because I do believe things will get better. And I will give my thesis for that today. But first, I want to say, as always, this is not financial advice, just my opinion. I don't have a crystal ball. I have a ball full of gumballs. But when we do look at the bigger picture, I do believe that we have some major catalysts setting up right now. And I do believe that the end of this government shutdown was still a major catalyst. But a lot of investors have put themselves into a short-term moment of fear, uncertainty, and doubt because they thought as soon as this government shutdown ended that the markets were going to fly. So I do believe that the markets will still have a big bounce up, and I do believe that any investors who are selling out right now will regret what they are doing, because I believe that the rally back towards the upside is going to be a face-ripping rally because of all the liquidity that is going to enter the market here soon enough, which we will get to in a second. But first, just looking at this major article right here, this is talking about how the government shutdown did end, but also with that, a lot of the data from October is up in the air whether we will actually get it or not. So just as this reads, data on inflation and the jobs market in October are up in the air. Through a top Trump advisor said Thursday that the jobs data may be released, but without a read on that month's unemployment rate. And so with that, the uncertainty about the economic outlook is complicating bets on interest rate cuts in December and next year. So right now, the Federal Reserve has a projection, and this just came down drastically today. Before today, it was about 60 or so percent, 60 to 70%. Now we have a coin flip here about 50-50 whether or not the Federal Reserve will cut rates in December. And myself, I do believe that the Fed will cut rates in December. And I feel that a lot of the news is just creating a lot of panic within the markets. But if we follow the bigger picture, as we have been doing on this channel, and what the Federal Reserve is doing, they will not allow these markets to fail, because last week we had a lot of fear, uncertainty, and doubt all around Michael Burry, and then also this big AI bubble that we were in and this short that he did, and everyone was thinking that's why the markets were dropping. But we did some deeper research, and we found that because of the government shutdown, the banks were having some liquidity issues, and the Federal Reserve, once again being our friend, they stepped in and they provided $29 billion worth of liquidity for the banks. So they did provide liquidity for the banks, showing that the Federal Reserve will not allow the banks to fail, and they will not allow the markets to fail either. And so this liquidity issue coming from this government shutdown, we haven't been seeing payouts from the government. And with this government shutdown, many were thinking that the news of the government shutdown would just be the end of the market bleeding that we have been seeing, but they are missing the bigger picture, that it's all about liquidity, because the liquidity should be entering the markets here soon enough, and a lot of federal employees are about to get paid, but the government shutdown just ended last night, so they haven't been paid just yet. And when we look at the payout schedule, we can see we have payouts coming on the 15th, the 16th, the 17th, and the 19th. So payouts going into next week, and knowing that the banks have recently had a liquidity issue and that we have had low liquidity within the markets, it is no surprise to me that we have been seeing a sell-off within the markets. Again, I still believe that this government resolution is a major catalyst for the markets, but things don't just happen like that. But when the liquidity starts flowing back into the markets, I do believe that we will start seeing assets rip here once again. And not only the liquidity that's about to enter the markets, but again, I do believe that the Federal Reserve will indeed do the right thing in December and cut rates once again, because they just helped out the banks. They cut rates in September and October, and I see no reason for them to not do the same in December. I feel that the Federal Reserve has already shown their hands, that they are going into this larger cycle of quantitative easing. And something else that the federal chairman mentioned in the last FOMC meeting is that they are ending the reduction of asset purchases in December. So they are going to be purchasing bonds again come 2026. So the Federal Reserve is looking very dovish. But if you were just following the news articles and you were following a lot of the fear, uncertainty, and doubt, you may not see this. And I feel that investors right now are being misled by this projection. So it's at about 50-50. This comes from the CME group. So this isn't actually the Federal Reserve. This isn't Jerome Powell giving these projections right here. This is just speculation on what the Federal Reserve will do. And I feel too much weight is held on these projections. Again, when we follow the bigger picture, the Fed is our friend. And I do believe over the coming months, we are going to constantly hear that you should not fight the Fed. Again, always just my opinion, never financial advice, but we have done pretty well on this channel following what the Federal Reserve has done all year long. And also with the recent fear, uncertainty, and doubt that we have seen, well, we are still right around all-time highs when we look at the major indexes. So we have been hyper bullish since April, and there has been a lot of easy money to be made until most recently when things have gotten choppy. But by no means have we seen a crazy death tick or anything like that. And we are still on this upwards bullish trend, and we are just right at the 50-day moving average on both of the major indexes. So myself, I am very excited, and a lot of buying opportunities are presenting themselves within the markets. And to me, this is no more than a market cycle. I definitely don't see the markets having a crash anytime soon. And if you are looking at the economy saying that we are in a recession and that is why we have to drop, well, I would argue and I would say the stock market isn't the economy. And when we look historically at the most recent, economic crash event that was in 2020, what did the Federal Reserve do then? They stepped in and they cut interest rates down to 0%, showing that they will not allow the markets to fail. And right now, the Fed is once again cutting rates and showing that they are not going to allow the markets to fail. Again, just my opinion, but there are a lot of assets that I am looking at in the markets right now that are on a discount. So we're going to go down the list, starting with advanced micro devices. But real quick, before we get into AMD, I almost forgot to mention this, and this is, last week we saw all that fear, uncertainty, and doubt about Michael Burry and his big short on NVIDIA and Palantir. Well, guess what? Now Michael Burry has officially closed his hedge fund. So he's saying goodbye to the hedge fund, which means he has also closed the shorts if he is closing the fund. And this is why I say that the bigger picture last week was liquidity issues and not what Michael Burry is doing. This upset me just so much. I hated seeing this all across, the finance YouTube and finance news last week, because really I feel this was a nothing burger. And with these big hedge funds, their 13F filings come out a lot later. And so when we look at this big picture, it looks like Michael Burry probably shorted a long time ago and went into the red. He was wrong on his shorts, and now conveniently, with the markets dropping off, he may have finally closed those shorts, and now he is closing his hedge fund. Nothing new from Michael Burry. Again, This guy is a perma bear. I don't understand why he got so much news last week and why everybody acted like this guy was God and he knew what the markets were doing and he had a crystal ball, right? Michael Burry, yeah, he called the 2008 financial crisis, but he's also called 50 of the last crises that did not happen. This guy is known for deleting his tweets. He is known for deleting his Twitter and now for closing his hedge fund. So funny enough, last week, everybody became super bearish saying this was the top of the AI bubble because of Michael Burry, but now he is out of the picture. So I do expect for AI to go a lot higher. I do expect for AMD to go a lot higher because there is so much hype around AI. I don't think that we are at the top of the bubble by any means. We have seen so much AI just integrated into society this last year, and we are seeing more and more as we go forward. We are seeing a lot of robotics introduced. We are seeing a race with quantum computers between China and the United States. And with all this technology, we need powerful chips to power this technology. And the two largest companies for this, NVIDIA and AMD. So, of course, NVIDIA number one, they were recently at a $5 trillion market cap after the bleeding, now at about 4.5 trillion. But the reason why this market right here has so much investors interested into it is because of all the value that they are providing. You know, with this AI race, there is a lot of demand and only so much supply. So we are seeing a supply and demand shock, and NVIDIA has already shown that they can't take care of all of this demand. So AMD being number two, they come in very strong. Recently, we saw this with this big gap up because they announced this deal with OpenAI, right, with the supply and demand shock. And what I'm really liking with AMD right now, a lot of stocks at a discount, a lot of stocks have fallen by 10, 20% or more, but AMD still holding up very strong even after we saw this massive gap up. So we are still pushing up in AMD. This has been one of the strongest positions in my portfolio. You know, we have had a lot of bleeding recently. Yesterday was a pretty bloody day, but AMD held up green yesterday. AMD did bleed with the rest of the markets today, but only down by 4%, not really as severe as a lot of the markets. So showing a lot of strength here on technical analysis. We are still elevated on the candlestick chart. We are right at the 50 mark, 55 to be exact, on the relative strength index. And on the MACD, we recently did see a bearish cross, but even with this bearish cross, the price is still staying elevated, and we may see a bullish cross once again with AMD. And again, I do believe the macros are looking very positive for the markets right now. Again, a lot of fear, uncertainty, and doubt, but when fear of missing out kicks back in, when sentiment shifts, I do believe that AMD could go a lot higher, a very strong play currently. We also saw Lisa Su the other day talk about AMD and her projections for the future, a lot of revenue projected, and she expects for the whole data center market to be valued about 1 trillion by 2030. So I'm very excited with advanced micro devices. Again, a very strong play, even with the recent bleeding. AMD still holding up very well. Next, we're going to talk about the quantum computing sector. We're going to look at my favorite quantum computing stock, QBTS, and the bleeding recently in quantum has been pretty rough. I do expect for there to be a big bounce back up within the markets here soon enough, and I do expect for quantum to be one of those sectors that rips the hardest, a true risk asset. In the short term, we have been bleeding. We have fallen on the candlestick chart. So we have looked at the stock all year long when it comes to layers. We have sat in multiple layers. So at the beginning part of the year, we were in this rising level of support and resistance. We broke out of that multiple times. We got all the way to levels of price discovery, but we have fallen through that level. We were riding at this level of support, which was previously resistance. We have crashed underneath that. And then with today's bleeding, we are down another layer. So right now, QBTS and the entire quantum sector, again, having a ton of bleeding. We are lower on the relative strength index, and then we are very low on the MACD, one of the lowest points that we have been on all year long. But when there is a snapback within quantum, we could see a massive rip up. And while assets are dropping, this is where I get most excited personally, especially for risk assets, because I do know that bounce will come. So with QBTS, I am looking at adding some options contracts to this play soon enough. In the short term, I haven't seen confirmation to want to add just yet. When we recently saw this drop off here, I was talking about how I was looking at adding shares, but not options yet, just because the technical analysis didn't look clear yet. And it still doesn't look just clear enough for me to add, but I will here sometime in the near future. We have also fallen under the 50-day moving average. We are falling closer to that 200-day moving average. So I would just say with QBTS and all of Quantum to proceed with some caution. But again, I am more bullish than I am bearish. And I do expect for there to be a bounce back here soon enough. But I want to put myself in a position where I could really succeed within this play when I get some type of confirmation of a reversal with trend, which I do believe that confirmation will be coming very soon as all this liquidity enters into the markets and when the Federal Reserve does cut in December. So I'm very excited about what we are seeing currently. I know in the short term, if you are invested in these quantum plays and you are holding through the blood, things are pretty rough, but we must remember this sector ran up like crazy throughout this entire year. So very volatile. A lot of investors are looking at this, and quantum in general is growing. There, like I say, there is a quantum race going on right now between the United States and China. So we'll just have to see where we go next, but a lot of true intrinsic value with quantum. And again, sentiment right now, pretty bad. A lot of fear, uncertainty, and doubt within the markets. But when sentiment was positive, when there was fear of missing out, quantum, the entire quantum sector was going crazy. And really with quantum, the reason why it has gone so crazy this last year is over the last 20 years with quantum, there's been a lot of research and development, but this last year, quantum has made a ton of breakthroughs. You could call it a quantum leap. With QBTS, their customer acquisition has been tremendous and their bookings are up 500% year over year. So working with a lot of different corporations, the entire quantum sector, again, having a lot of value despite the bleeding that we are most recently seeing. And now for the next stocks, we're going to talk kind of about the cryptocurrency sector, as Bitcoin had another rough slide today down to 99,000. This is a great buying opportunity to me. You know, people were having fear of missing out when Bitcoin was at 130, and now that we are right under 100,000, kind of a psychological mark, many investors think that this is the end of this coin, but we are still elevated at about 100,000, which is incredible to say, because I remember the days when Bitcoin was a lot lower than it is now. Currently, Bitcoin is under the 200-day moving average. We actually see a cross happening here between the 50-day and the 200-day, so they're right at about the same mark. On technical analysis, we are low on the relative strength index and low on the MACD. I do expect for there to be a bounce here soon enough within cryptocurrency. Again, with everything the Federal Reserve is doing, this is going to be tremendous for all risk assets. And historically, when the Fed funds rate is low, this is when crypto pumps the most, and we are still at 99,000. So still a high point for Bitcoin. I consider this to be a buying opportunity, especially in all the different crypto plays that take advantage of having reserves in Bitcoin or are crypto miners. So the first one here, MicroStrategy, has been on a very hard slide, has fallen well under the 200-day moving average and has looked like a falling knife basically since July. And if you zoom out even more, it has been a falling knife since 2024. So we are very low. We are right at these levels of support, just slightly breaking under it, but we are also very low on the relative strength index and low on the MACD. And MSTR holds 600,000 Bitcoins. And when Bitcoin does have a rip up, I do expect for MSTR to rip up right with Bitcoin. So we have MSTR. We also have another favorite on this channel, DJT. They hold $2 billion worth of Bitcoin, the lowest point we have been since September of last year. We are also very low on the relative strength index, not really seeing a lot of movement on the MACD, but this is another huge crypto company. They have a lot of crypto ETFs set to release here soon in the future, and they have $2 billion worth of Bitcoin on their balance sheet. So another play that is also just waiting for that big rip up from the cryptocurrency market, from Bitcoin specifically. If you are not into Bitcoin, there is also this play, which is Tom Lee's company. They have the largest Ethereum holdings within the world, Bitmine Immersion Technologies, which has also been seeing some bleeding, but is right at about the 200-day moving average. And despite the bleeding that we have seen, we are just back to levels that we were in August. So this play right here has been in a sideways trend. Again, they have the largest holdings of Ethereum, and Ethereum recently has been having a pretty hard time. So if you are bullish on Ethereum, BMNR is a great leveraged asset to look at. Ethereum also at that 200-day moving average. And right now, while all of these assets look like horrible, where everything looks like it's the end of the world, falling knives, you know, we have so many bullish catalysts just right around the corner. We have all the liquidity that should be entering the market. We have the Fed, in my opinion, cutting rates in December, and things overall are looking very positive in my opinion. So I'm very excited about everything. I do believe that these opportunities that we are seeing are blessings from the markets. Things did get a bit overvalued in the short term, and now things are getting a bit undervalued in the short term. Just some simple market cycles. I'll finish with this company right here. I have yet to talk about this one, but MP Materials. This is the only rare earth and processing mine within the United States out of Nevada, and there's been a harsh sell-off in MP Materials in the short term. So we got all the way up to $100 and got slashed by 50%. Down to $50. Now we are very low on the relative strength index, and we can see a potential bullish cross coming here very soon on the MACD. This is one of those plays that I am looking at for the long term because of all the true intrinsic value with MP. And I do consider this to be a great company to diversify your portfolio. If you are in a lot of these AI plays like I am, or technology plays, going to some rare earth, not a bad position to have within your portfolio. But I would be curious to hear what you all think in the comments section below. Do you think this is the end of the market? Do you think that the markets are going to continue to collapse? Or do you agree with my thesis that we should see a lot of liquidity here soon enough, and that the Federal Reserve will step in December? I would be curious to hear what everyone else thinks in the comment section below. So please drop a comment, and I'll also finish with what I say basically every video, which is just never over leverage yourself, because the markets go on forever. They are perpetual. And right now, while there are great buying opportunities within the markets, I'm sure many are not able to participate because they bought high and now they are holding, or even worse, they have sold into the blood. But if you never over leverage yourself, you could see the markets just how I am right now, as beautiful opportunities and cycles, because that is exactly what they are. And as bad as things look in the short term, there will be a shift in sentiment and on the charts sometime here in the near future. But again, that is just my thesis. I've been following the Federal Reserve, and this is personally what I believe. So please let me know what you think. Please leave a like, and please subscribe to the channel. And I thank you all so much, and I will see you in tomorrow's daily talk of stock.